There's a hidden financial empire worth over $50 trillion, bigger than the GDP of every country except the United States and China. And tonight, we're exposing the secrets it never wanted the world to see. This is the story of the global shadow banking system, the invisible financial machine that controls markets, governments, and the economy, yet almost no ordinary person knows it exists. For most people, banking begins and ends with the institutions they see on the street. A branch with glass windows, a teller handing out cash, a credit card issued by a major brand. But the world of real finance lives far beyond this familiar surface. Hidden in plain sight, operating in silence, exists an enormous parallel banking universe, one with no branches, no public oversight, and no government guarantees. A financial world that has quietly grown into a $50 trillion force capable of shaking the global economy with a single miscalculation. It is a world known as shadow banking, and the truth about how it functions, who controls it, and why it is so dangerous has remained buried for decades, until now. The shadow banking system didn't begin with criminals or corruption. It began with big banks trying to become even bigger. In the 1970s and 1980s, traditional banks were limited by regulations. They could only lend a certain amount, hold a specific level of risk, and maintain strict capital reserves. But global financial giants found a way around these rules. They discovered that if they shifted certain activities outside the regulated banking system into funds, investment vehicles, offshore entities, and complex financial contracts, then they could lend more, risk more, and earn far more without needing approval from any government. These new, unregulated institutions weren't technically banks, so they didn't have to follow banking laws, and with that loophole, the shadow banking system was born. At first, it was small, just a few billion here, a few billion there. But markets are like wild animals. Once they taste freedom, they grow faster than anyone expects. By the late 1990s, hedge funds, money market funds, investment banks, insurance giants, and private lenders were all operating in this new shadow system. They bought and sold loans. They created new forms of credit. They built financial structures so complex that even insiders sometimes didn't understand them fully. And they did it all without the safety nets that protect traditional banks. No deposit insurance, no central bank backing, no government oversight in moments of crisis. The world was witnessing the birth of a new economic empire, one more powerful, yet far more fragile. The danger of the shadow system became terrifyingly clear during the 2008 financial collapse. Most people think the crisis was caused by subprime mortgages, but the truth is much darker. The real explosion happened inside the shadow banking network, where trillions of dollars worth of complex financial products were built on top of risky home loans. These products, mortgage-backed securities, collateralized debt obligations, credit default swaps, were traded aggressively by firms outside the regulated banking sector. When home prices started to fall, the entire shadow system went into panic. Money market funds froze, repurchase markets collapsed. Investors demanded their money back all at once. And because the shadow system wasn't backed by central banks, it nearly imploded. The collapse was so severe that the U.S. government had to bail out institutions it didn't even regulate, because letting them fall would have destroyed the global economy. Yet, unbelievably, after the crisis, the shadow system didn't shrink. It grew even bigger. Today, it towers at more than $50 trillion, spread across hedge funds, private credit firms, structured investment vehicles, asset-backed lenders, off-balance sheet entities, and secret market operations that normal citizens will never hear about. Some operate from Wall Street skyscrapers. Others operate from anonymous office buildings in Luxembourg, the Cayman Islands, Hong Kong, Singapore, Switzerland, and other financial havens. And still others operate in total secrecy, trading billions with nothing but digital signatures and private agreements. The level of risk embedded in this system is almost impossible to measure. Consider the repo market, the beating heart of shadow banking. Every night, trillions of dollars are exchanged as institutions lend each other money, using securities as collateral. These are overnight loans, often rolled over day after day, creating an illusion of stability. But If one major institution loses trust, if one key player stops participating, the entire chain collapses. This happened in 2019, when the repo market seized up without warning. The Federal Reserve had to pump hundreds of billions into the system within days to prevent disaster. Most people never heard about it, but insiders knew that the shadow banking system had shown its cracks again. Then there's the world of private credit, the fastest growing corner of shadow finance. Traditional banks lend less than they used to because regulations are tighter. So private credit funds stepped in. These funds, often backed by billionaires and major investment firms, lend directly to corporations. They hold loans worth hundreds of billions, yet face almost no regulatory oversight. If these funds ever face mass withdrawals or major defaults, there is no safety mechanism to stop the collapse from spreading. Another threat lies in money market funds, huge pools of cash that millions of people think are safe. But in reality, many money market funds invest in risky short-term debt, commercial paper, and foreign obligations. Twice in the last 20 years, these funds nearly broke the global financial system. In 2008, one major fund broke the buck, meaning it couldn't maintain its $1 share price, causing mass panic. And in 2020, during the pandemic, money market funds froze again until the Federal Reserve intervened. But perhaps the most hidden danger of all comes from derivatives contracts tied to interest rates, currencies, commodities, or credit. The shadow system holds hundreds of trillions in notional derivative exposure. Most contracts cancel each other out, but not all. A single miscalculation by a major player, a sudden interest rate shock, or a geopolitical crisis can ignite a chain reaction that spreads across the entire financial network. In ours, we saw a glimpse of this when Archegos Capital collapsed in 2021, wiping out billions from giant banks almost overnight because the trades were hidden inside derivatives. As the shadow banking system grows, it gains enormous influence over global markets. It affects the price of oil, the stability of currencies, the interest rates countries pay, the credit available to businesses, and even the survival of governments. Some nations depend heavily on shadow lenders for borrowing. Others are vulnerable to sudden withdrawal of shadow capital. A shock in New York or London can cause financial chaos in Asia, Africa, or Latin America within days. But the most terrifying part is this: shadow banking is too big to regulate and too interconnected to fail. Governments don't fully understand it. Central banks can't monitor it. And ordinary people have no idea how much of their daily life, jobs, savings, prices, investments depends on the stability of a system that was never designed to be safe. Every major financial crisis of the last 30 years has been amplified by shadow banking. And the next collapse, whenever it comes, will likely begin here. Whether it's triggered by rising interest rates, corporate defaults, geopolitical conflict, or simple market panic, the shadow system's fragility means even a small spark can ignite a global fire. And yet, the system continues growing because it benefits the powerful. Big institutions make enormous profits. Governments get easy access to investors. Corporations receive loans they would never get from a traditional bank. Everyone involved receives short-term gains while long-term risks accumulate silently in the dark. We live in a world where financial empires rise and fall behind closed doors, where markets depend not on transparency, but on blind trust between institutions racing for profit. A world where a $50 trillion unregulated system can collapse silently, suddenly, and catastrophically, and ordinary people would only learn the truth when it is already too late. The shadow banking system is the most powerful financial force the world was never meant to see. It shapes markets, moves trillions, and makes decisions that affect every country, and yet, almost no one knows how it works. But understanding it is the first step towards seeing the risks ahead, because the next global financial crisis will not begin in Wall Street banks or government institutions. It will begin in the shadows, and when it does, the world will realize too late that a system built on secrecy cannot survive forever. If you want to understand how this collapse might start, and how it might reshape the future of the global economy, make sure to watch the next episode.